Everyone. I am C. Anshul Heda, the moderator of this webinar. We are delighted to welcome you all this webinar, which is being organized by the Continuous Professional Educational Committee of ICAI. Please block your calendar for CP webinar on Wednesday and Friday. It's my pleasure to be moderator for this webinar on critical issue in GST TDS and important aspect related to taxation and registrations of NGO under IT Act. In short, while we will start this webinar, first I would like to appraise you about the CP committee. In today, every changing professional scenario worldwide, the biggest challenge the professionals face is how to stay on the top of their game while adopting to new requirements and norms. Therefore, it is imperative to be up to date to offer unique guidance, influence others with their innovative approach and expertise. It is also virtual to stretch old idea beyond traditional boundaries to create new perspectives. In this context, continuous professional education facilities professional to maintain, improve, and burden their knowledge, skills, and expertise requirement to achieve their professional goals through webinar and seminars extra. The program for this evening is as below. We have two sessions, 1 hour each, and topics are first critical issue in GST TDS and important aspect related to taxation and registrations of NGO under the IT Act. Our eminent speaker will be talk about the above mentioned two emerging area of professional interest. Now, I welcome all of you on the behalf of Chairman and Vice Chairman of CP Committee. So, today our first speaker, CA Gagan Mittal ji. He has over 35 years of experience in finance, taxations, and compliance, and business advisory, blending technical expertise with passions for mentorships and knowledge sharing. He has strong inclination toward public speaking and structured training involved from early debates and moot court into impactful corporate trainings, workshop, and skill development sessions. He specialized in corporate finance and taxation, focusing on strategic planning and compliance management and tax implementations. He is also recognized for simplifying finance for non-finance professionals and enhancing compliance and audit awareness for the statutory and regulatory preparedness. Now I will call our speaker, CA Gagan Mittal sir. Please start your session. Thank you.
Good evening, everyone. Thank you, Anshulji, for giving such a gracious introduction. I'm so thankful for the Institute of Chartered Accountants of India, our mother body, for giving me this privilege to address this August gathering on the critical issues in GST TDS. I'm so thankful to CP Committee Chairman CA Satish Gupta sir for giving me this privilege, and Vice Chairman Shri Vishnu Gupta ji for reposing their trust in me to deliver on today's topic. Let us start the deliberations on GST TDS. So, my PPT is visible to everyone. My PPT is visible.
Yes, sir. Yes, sir.
So let us start with the today's topic, critical issues in GST TDS. As everyone knows in our profession, why TDS was introduced. TDS was introduced in this PPT in this session. Will be covering the fundamentals and critical issues in GST TDS, highlighting the purpose, applicability, and compliance requirements. So as everyone knows, is in income tax, why TDS was introduced. Based on the same analogy, when GST was introduced with effect from 1st July 2017, government thought it fit from September notification to introduce GST TDS concept also here, and it was implemented with effect from 1st October 2018. The reason is primarily the same, to know from the government who payments to whom are being made and whether they are declaring those payments and those transactions in their income tax return. So GST TDS was introduced to curb tax evasion and ensure tax compliance, especially by suppliers in unorganized sectors, because basically in government sectors, very small suppliers in unorganized sectors are there. So government was not able to monitor the transactions and tax was not being corrected properly. So to keep in mind, GST TDS was introduced. So on whom this GST TDS is applicable and who are the deductors? So TDS is applicable under GST if the total value of taxable supply under a contract exceeds 2.5 lakh. So here it is not necessary that contract is formal contract. Even a informal contract where a payment is being made to the supplier exceeding 2.5 lakh rupees, GST TDS is required to be deducted. Yes, as in income tax here, in keeping in mind the 2.5 lakh limit, GST and cess is excluded. So who are the deductors? Deductors basically are government departments or establishments of central, state government, local authorities, government agencies, or other notified bodies. As of now, there is no notified body as it is. So all government department, be it central government, state government, or local authorities, they are required to deduct GST TDS on the supplies being made to them. So no TDS is required where supplier and place of supplier in different state from the recipient registration. This is a very important requirement. But then if there is a confusion, best thing is to deduct DTS as in income tax. There is no threshold limit under GST registration to deduct TDS. Even small government department, only requirement is if the payment is exceeding 2.5 lakh rupees in a year, then deductor is required to obtain registration and start deducting GST TDS. So what is the registration requirement? Deductors must register for DDS separately through GST portal. If deductor is registered as a GST dealer, that does not automatically amounts to registration under GST TDS. So registration under TDS is separately has to be taken. It has to be separately applied for and separately taken. So you have to apply in GST registration 7. Yes, in few cases where government department do not have PAN number, if they have TAN number, they can apply through TAN number also. So GST TDS will be TAN based GST TDS number. If they have a PAN, yes, it has to be applied through PAN only. So what is the criteria for determining TDS liability of contract governed by these provisions? So this is the quick checklist. Is the paying entity a notified deductor under GST? It has to be seen whether it is a government department. Contract value is about 2.5 lakh rupees. No formal contract is needed. But yes, payment exceeding 2.5 lakh is being made, then GST TDS is required to be made. Is the supply taxable? This is important because no GST TDS is there on exempt or nil rated supplies. Are the parties registered under GST? If the deductor is registered and supplier is not registered, then no GST TDS. And then, of course, supplier and place of supply in the same state for CGST and SGST and different state for IGST. So 2% GST TDS is applicable. TDS is 2%. In case of SGST and CGST, 1% each. And in case of interstate supplies, is it 2%. So thumb rule, in my practice, what I have seen is best is if it is IGST, flat 2% and round it off to a higher number. And if it is 1% SGST and 1% CGST, first decide on 1% amount, round it off a higher amount and make it 2 times. Don't deduct 2% as it is, because then in rounding off, while in totaling the amount of all the deductors, TDS may be less. So government may not accept your less deduction. So when deduction has to be made on amounts credited or paid, whichever is earlier. Payment and return filing, DTS amount must be deposited by the government with the government by the 10th of next month. So for the month of August, by 10th September, all the GST TDS has to be deposited and return also has to be filed by 10th of next month, succeeding month. So tax and return filing are on the same date. So GSTR 7 must be filed. And then after filing of GSTR 7, TDS certificate in GSTR 7A has to be issued to the suppliers. So who are exempt? No TDS for exempted goods or services purchased from unregistered suppliers. And also for payment made for land, purchase of land and building, no TDS is required to be made. And also no deduction for supplies where contract value does not exceed 2.5 lakh. Contract here, again I am repeating, does not mean formal contract. Even in informal contract, wherever a payment to a contractor or a person or a firm or a company exceeds 2.5 lakh, then GST TDS is required. So supplies made by government departments within themselves, by government departments, local governments, government agencies and PSUs to one another are exempt for TDS. So when government departments are supplying within themselves, no GST TDS is required to be made. So why? Because TDS provision seeks to exempt supplies made by government department and PSUs to government departments with effect from 31st December 2018. Earlier, there was this confusion. So government brought out this notification number 73 2018 to remove this confusion. And how you can get tax credit of GST TDS? I have seen many times deductors do file their GST return within time, but the suppliers whose TDS is deducted, they don't take action on GST TDS and they don't get credit of the GST TDS. So to take the credit of GST TDS, TDS TCS credit receipt tile is provided for all taxpayers. They have to separately file the GST TDS credit received return. Unless they file this GST TDS credit received return, they won't get credit of this GST TDS. This 2% amount remain, 2% GST TDS will always remain suspended. So they have to file this GST TDS received return after deduction and collection before 10th. Deductees have to accept or reject the TDS credit. They can accept or reject. If they feel no, this TDS is improperly deducted, they can reject from TDS TCS credit received tab. So they need to file TDS credit received return from this tab provided on the portal. Then only the deducted amount will there appear in their cash ledger, which can be used for payment of balance amount. So how this is done? TDS credit received tab is auto-populated by the GSTR 7. Just like that, when we file the income tax TDS return, 26 AS is automatically populated. So as soon as GSTR 7 is filed, GST TDS tab is auto-populated. So once TDS credit received is filed, a person cannot undo the action. Once you have accepted or rejected, they cannot undo it. You cannot file TDS and TCS credit received from without taking any action on all the populated records in the top table. They have to check all the tabs there and take action on that. It is a deliberate action on the part of suppliers. They have to take action on every tab. So due date of filing TDS and TCS credit received on GST portal, as it is, there is no last date, there is no due date for filing this TDS TCS credit received return, but preferably it must be done before the deadlines where tax payment is due. So if you want to take credit of the TDS credit, then before filing the GSTR 3B, 20th of the following month or 18th of the morning following every quarter for GSTR 4. So this deliberate action by suppliers is very important. In many cases, I have seen suppliers don't take action at all, and later they come to their consultants, chartered accountants. Sir, we are not getting this 2% credit. How to get this 2% credit? They don't understand that they have to take deliberate action to accept. When they accept this, then only they will get credit of this 2%. And what are the consequences of non-compliance? So penalties and for every action and non-action, there is a penalty and consequence. So when you fail to deduct TDS, you have to pay interest on amount not deducted or delayed deducted, and tax amount is recoverable as per law. If you fail to pay the deducted TDS to the government by the due date, then interest at 18% is charged beyond 10th of next month. If you don't file your GSTR 7 return in time, late fee of ₹100 per day, subject to a maximum of ₹5,000 is levied. So this is a substantial amount, and in case of government, this is recovered. This is recoverable directly from DDO. So this is personal liability of DDO. Yes, government will take action on the person who is registered as a GST TDS deductor and the officer responsible for deducting TDS. So government will raise a demand on the person who is registered as an officer responsible. So what are more consequences of non-compliance? When you don't issue TDS certificate within 5 days, a late fee of ₹100 per day subject to 5,000 maximum. Yes, presently this is not being levied, but then provision is always there and government can always resort to this provision. It may catch us on wrong foot. So you have to take this deliberate action, just as in income tax we issue form 16 or 16A, whatever is the case. So GSTR 7A has to be issued within time, that is within 5 days after filing the GST TDS return, that is 10th of the succeeding month. Incorrect or fraudulent TDS deduction or reporting, penalties can go up to 100% of the tax involved, along with prosecution and imprisonment in severe cases. Where fraud is deliberate and amount is quite high, then this is a very serious consequence, prosecution and imprisonment. And in case of government officers, this is a serious consequence where you are prosecuted for such defaults. It can inadvertently affect their service. So general non-GST compliance for offences without specific penalty provision, the penalty can be up to ₹25,000 and interest 18% on late or non-payment of TDS or tax. So this is just a tabular form of all the penalties, non-compliance and penalty. No TDS deducted, interest on TDS plus recovery, TDS deducted but not paid timely, interest at 18% plus recovery, late filing of GSTR 7, ₹100 per day, maximum up to ₹5,000. Delay in issuing TDS certificate, ₹100 per day, maximum ₹5,000. Fraudulent TDS reporting or evasion, penalty 100% of tax involved plus prosecution and possible jail. General GST penalties for offences may be up to ₹25,000. So how it is calculated, calculation of TDS on GST payments. Apply 2% rate to the value of supply excluding GST and cess. GST and cess is not included in calculating the TDS amount. So TDS is calculated on the amount excluding GST. Rate is 2%, 1% for SGST, 1%. So GST, as I told you earlier, round it off to higher amount. Don't round it off to the lower amount. Always round off to the higher amount. How to verify contract value? check total contract value, confirm that contract value excluding GST exceeds rupees 2.5 lakh rupees. Again, repeating, does not mean formal contract. If payment to a person, firm or company exceeds 2.5 lakh rupees or 2 lakh, 2,50,000 in a year, GST TDS is required to be deducted on all amount. There is no threshold limit as it is. If the amount exceeds by 10 rupees only, say it is 2,50,000 10 rupees, then GST TDS is required to be deducted on 2,50,000 10 rupees, not on 10 rupees. So keep in mind this. So GST has to be included, excluded, verify supplier registration. Both deductor and suppliers are registered under GST. Identify aggregate value. For ongoing multiple invoice contract, consider the aggregate contract value, not the individual invoice amount. Confirm that supplies are taxable because nil rated and exempted supplies do not fall within GST TDS ambit. Supporting document has to be checked. And with the payment record, regularly you have to reconcile payments and invoices values to ensure TDS has been applied where required in the contract. So key point is never calculate TDS on invoice because invoice includes GST portion. Always exclude GST. Always split TDS equally for CGST, SGST. Many a times I have seen there is a difference of 1 rupees in CGST, SGST. It makes life difficult later on. This is just an example how you can deduct the GST TDS or round it off. This is another, this is intra-state supply example. This is inter-state supply example where IGST has to be deducted. So what are the common mistakes deductors make, government departments make? Because you have to understand government departments are not equipped properly because officers who are responsible for making payments and deducting tax many a times do not understand the provisions correctly and properly. So you have to guide them to avoid these mistakes. Incorrect PAN details, providing wrong or invalid PAN or deductees, then your GST return can as it is be rejected or it may prevent deductees from claiming tax credit. So because for suppliers, their GST number is based on PAN. So proper PAN-based GST has to be given because while uploading the return, the facility will automatically check the GST number. And if the GST number is not correct, return cannot be uploaded. Also, the GST number has to be active. For all suspended or not active, inactive GST number, return cannot be filed. So failure to deduct TDS when required is very important deficiency which government departments do make. Missing out on deducting TDS on applicable contracts because due to lack of awareness or misunderstanding of the thresholds. What is the threshold? Incorrect TDS rate applicable, using TDS, wrong TDS rate instead of mandated 2% under GST can lead to compliance issues because many times they confuse GST TDS with income tax TDS. And as in contract under 194C, in some cases, in case of individuals, rate is 1%, they deduct 1% GST also. So this is not correct in GST. In ignoring updation in rules. So you have to be regularly updated in GST TDS because it may lead to inadvertent non-compliance, poor record keeping and documentation. You have to keep proper record for TDS deduction, deposit and filing because later on these may be needed for audit and compliance assessments. In government deductors, CAG comes for their audit. CAG may not come for audit every year, but whenever it comes for audit, it will check the record for all the years for which it has not come. And if any deficiency is found, the person responsible is personally responsible. So important is do it correctly the first time. Don't wait to make any corrections later on. So whenever you are filing your return for the first time, do it correctly. So avoiding these common errors by careful documentation, timely actions, and regular reconciliation will ensure smooth GSTT compliance and prevent penalties. So these are just relevant case laws. There is no major case law as it is up to now in GST TDS. Major legal reference is Section 51 of CST Act, which mandate TDS on payments by specified government entities and notified persons where contract value exceeds 2.5 lakhs. It is discussed in detail in authoritative sources like ICMI articles on TDS under GST. ICI also has in many places clarified these positions. Practical examples and interpretations of these sections have been highlighted in discussions and FAQs by government departments such as Karnataka's Commercial Taxes Department. Maharashtra Authority for Advanced Ruling has also provided rulings related to threshold and applicability of TDS under GST, reinforcing the principle that TDS deduction applies if the gross contract value exceeds 2.5 lakh. So once it exceeds, once you are in, there is no escape. These are the recent amendments effective from 10th October 24 by notification number 2524. GST TDS is now applicable on purchase of metal scraps. HSN is mentioned there, chapter 72 to 80 and 81 from registered suppliers is taxable. Earlier, it was not there in purchase of metal scrap. Now it is there. Buyers of metal scrap must obtain separate GST registration. This is an added requirement on suppliers which are non-government departments and added opportunity for chartered accountants who are dealing with metal scrap dealers, because now metal scrap dealers have to obtain separate GST registration for TDS deduction and comply with the TDS deduction requirements, deposit, GSTR filing, and issuance of TDS certificate. This amendment effectively expands the scope of GST TDS. So this is a very important amendment made by government recently, enhancing our practice scope also. There is no direct change in the standard GST TDS rate. It remains 2%. Threshold is same. So most notable amendment is inclusion of metal scrap transaction under GST TDS effective from October 24. So it has expanded the compliance obligation for metal scrap sector. So these are few examples: procurement of stationery from local suppliers. Gupta Book House purchaser is Rajasthan PWD department. Intrastate supply nature is there. So if PWD department purchase stationery worth 1.5 lakh, TDS is not applicable because contract is below the threshold limit. But then 1st June, the first invoice is 1st June. Now second invoice 21st July, again invoice for 1.5 lakh. Now the total excludes the threshold limit of 2.5 lakh. Now TDS is applicable, and GST TDS has to be made on the entire 3 lakh rupees, not on the second invoice itself. As I have emphasized earlier also, once threshold limit is reached, TDS has to be GST TDS has to be deducted on total amount, not on the amount which exceeds the threshold limit. So you have to be on your toes. You have to be always calculating whenever this threshold limit is being exceeded, whether you have the amount available for deducting the GST TDS. It should not happen that you are caught unawares and the remaining amount is not available for deduction and payment of GST TDS of 2%. So very important to keep in mind this threshold and the fact that threshold is only for the applicability of GST TDS provisions. Once threshold is reached, GST TDS is required to be made on all total amount, not again emphasizing, not on the amount which exceeds the threshold limit. So another example, procurement of stationery from non-local suppliers. So where interstate supply is there, Mrs. Kumar Book Depot from Delhi is the supplier. Purchases are again Rajasthan PWD department. 5th June, Rajasthan PWD purchases stationery 3.5 lakh. TDS is applicable on GST TDS applicable because threshold limit is already excluding. So exceeding. So TDS has to be deducted on the full amount of 3.5 lakh rupees. Yes, this is very important where receipt of service from local supplier, but at a different location. Because there was this exemption where registration of supplier and the deductor and the supply location is different. So where Ashoka Manpower is the supplier from Jaipur, deductor is Rajasthan PWD department Jaipur, nature is interested, but supply is being placed of supply is in Assam. So because Rajasthan PWD took electrician services worth 3.5 lakh from the supplier in Assam and service is delivered at Assam. So here GST TDS is not applicable even if the value of supply exceeds the threshold limit because the place of supply is different from the place of registration of supplier and the deductor and the beneficiary of the supply. So this is a very important exemption and very important point to keep in mind where supply is being made at a different location, then no GST TDS. So receipt of service from non-local supplier at a different location, again, it is not applicable because a location of place of supply is different and the place of registration of supplier and deductor is different. So you can also get refund under GST TDS if any excess amount is deducted and paid to the government. In this case, a refund can be claimed. And because the government is not entitled to the amount which is exceeding 2%, excluding GST and cess. But then important thing is deducted amount has already been added to supplier's electronic cash ledger. Then it cannot be recovered as a refund by the deductor. If you have filed your GST TDS return and shown this amount as TDS deducted from the supplier, and after filing your return, this amount is already credited to the cash ledger of the supplier, then you cannot recover this as a refund. So only the amount which is in excess while filing your GST return in GSTR 7, then that excess amount can only be claimed as a refund. The amount again, which you are not using, which you are not utilizing to give credit in your GSTR 7, that amount only you can recover as refund from the government. So again, this is to conclude, tax deducted at source under GST is not merely a procedural formality, it's a vital compliance mechanism. This ensures transparency, accountability, and timely tax collection within the indirect tax framework. It is introduced under Section 51, and its scope is being steadily expanded, now encompassing sectors like metal scrap. It demands meticulous attention from notified deductors. And for professionals' point of view, like us chartered accountants, it's a very good business opportunity. These are just a few tips. Always verify contract threshold and registration status before deducting TDS. Reconcile invoices and payment records monthly to avoid mismatches. You have to stay updated with amendments and sector-specific notifications to avoid inadvertent errors. You can use the GST website, maintain robust documentation, and issue TDS certificates promptly. So GST TDS basically is a shared responsibility between deductors and deductees because both have to take deliberate actions, like deductors have to file GSTR 7 and deductees have to file their TDS TCS credit return. Then only they can get the credit of the GST TDS deducted. So whenever it is executed diligently, it strengthens the tax ecosystem and minimizes litigation. So we have to embrace the precision, not just meet the statutory obligations. So this is from my side. Thank you so much. If you have any questions, I'm ready for the questions.
Thank you, sir. Sir, some questions are here.
Yes.
Sir, how to generate GSTR 7A, the TDS certificate for TDS?
The separate first facility is provided there on the website. When you log in as GST TDS deductor, there is this button for generation of GST TDS, just as there is facility for generating TDS return under income tax. Separate button, radio button is there for generating the GST TDS certificate. Mentioned there is GSTR 7A.
Yes.
So you have to log in as government deductor, then only this facility will be shown to you.
Sir, sir, regarding rounding,
You can use the service command, view download certificates command. You have to log into the GST website and check the services. Go to the services and use view or download certificates command. From there, you can download the certificates.
sir, regarding rounding of GST TDS, the
Yes.
system calculate at exact value, including decimals.
Yes, actually, when you file with decimals, uploading of return is problematic. So in my experience, it is better to round off to the higher amount. So if you are having say 101 rupees and 49 paisa, usually will round off to 101 rupees. But what I find, it's better to round off to 101 rupees to 102 rupees, not 201 rupee. So if you are GST TDS 1%, CGST is 101 rupee 49 paisa, then make it 102 rupees and double it. So deduct 204 rupees instead of 103 rupees. Right?
Okay, sir.
You are getting me?
Yes, sir. Sir, in case the deductee choose the reject options, it come
Yes.
back to deductors.
Yes.
What the deductor should do? How long it will remain in this login?
No. Once the supplier has rejected, it becomes very important to find out the reason of rejection with the supplier, why he has rejected, and correct it while filing the next return. You cannot file your next return succeeding the return in which he has rejected the TDS credit. You have to correct in the amended section amended section portion of the GSTR 7 why he has rejected, and you have to again upload the correct invoice or the correct the invoice value. Then only you will be able to file your succeeding return. Unless you have corrected the mistake, you will not be able to upload your succeeding return.
Okay, sir. Thank you. Sir, one more question.
Yes.
Sir, is GST TDS is applicable for the supplies made by another government organizations or government company?
Like I told you, when you are supplying inter-say within government department, one government department or local authority is or a PSU is supplying to another PSU or a government department or local authority, no GST TDS is required to be made with interstate supplies within governments.
Okay.
But when supplies is from outside government department, then GST TDS provisions are applicable. But within inter-say supplies, one government department supplying to another government department, no GST TDS is required.
Okay, sir. Sir, one questions.
Yes.
Location supplier and place of supply Bangalore, but place of recipient in Delhi. In this case, TDS not applicable or applicable.
Location of supplier is in Delhi.
Bangalore.
is in Bangalore and place of supply is Delhi.
Place of recipient in Delhi.
Place of supply is Delhi. Then
Delhi.
no GST TDS.
No.
I told you when the place of supply is different from the place of registration of supplier and deductor. Then, so if if the place of registration of deductor is X, place of registration of supplier is Y, and the place of supply is A, no GST TDS. But if place of supply is either X or Y, then GST TDS is applicable. It has to be always different from the place of registration of supplier and deductor. It has to be placed on a third place, not the place where you have obtained registration as a deductor or obtained registration as a supplier. Am I clear?
Yes, sir. I think, sir, questions is over. Thank you, sir. On the behalf of everyone present here, I extend our sincerely gratitude to Gagan Mittal, sir, for sharing such valuable insight with us today. The words were not only informative but also impressive, and they have truly enhanced these sessions. We deeply appreciate the times, efforts, and knowledge you have shared with us. Thank you once again for the enlightening us with your expertise, sir. Thank you.
Thank you,
Thank you very much.
Anshulji. Privilege has been mine. Thank you
Thank
so
you.
much.
Thank you so much, sir.
Yes, yes, Akshay. Akshay, sir.
Ji, sir, chairman and vice chairman, sir, have not joined as of now. They are still in the meeting. So we can proceed with the second session, sir.
Okay, sir. Now, I introduce our second speaker of today's sessions, CA Ravi B. Gupta, sir. He is founder partner of our firm, and has over 30 years of professional expertise in audit and assurance, taxation, corporate compliance, RERA matters, partnerships, registrations, and bank branch audits. He specialized in formations and taxations of charitable trust, private trust, and societies, and Section 8 companies. And he is also registered insolvency professionals and impairment peer review with ICAI. He has active served on key committee of ICAI and contribute to the ICAI publications and representation, including suggestions on reform to the Maharashtra Public Trust Act 1950. He is regular speaker of ICAI program and study circle addressing topics such as charitable trust, FCRA, CSR, and social stock exchange, and has engaged with senior officers of the CAG, Income Tax Department, and various institutions. Now I welcome Ravi Gupta sir to address us.
Thank you so much. Anshul Heda ji. I have shared the screen. I believe you can see the screen.
No, sir.
Just a minute.
Now, okay, sir.
It's fine.
Yes.
If- एक मिनट अंदर. So good evening, friends. Good evening, all the dignitaries on board and the chairman and vice chairman of the committees. मेरा मोबाइल का ये मेरा मोबाइल. So today my subject, I mean, I have been given 1 hour to speak on the subject of charitable trust, NGOs, taxation. And now, as we are all aware that 15 September has gone and the timeline for the individual returns, non-audit returns have gone. Now we'll be preparing ourselves for the audit cases and more particularly as far as NGOs are concerned, because NGOs are governed by the local state act also, as well as if it is a Section 8 company, it is governed by the Section 8 of Maharashtra Ministry of Corporate Affairs, Companies Act 2000, Maharashtra Corporate Ministry of Corporate Affairs. So we have to abide by the audit provisions also, and that is the reason as of now, till the time we don't find any notification or an extension, we have to assume that the due date for audits is 30th September and the due date for filing the returns is 31st October. So of course, all of us are expecting a extension in this particular dates, because otherwise it will be a big challenge for us. But anyways, as of now, till the extension is not announced, the date is 30th September. So with this background, I'll be covering uh, critical issues, because time given to me for this subject is 1 hour. So I'll be in a position to cover only the critical issues and more particularly the amendments related to taxation of NGOs and registrations also. I hope lot of participants on board will be having queries regarding registrations and more particularly regarding taxation also. So we can take queries as the coordinators say, whether in between or later on we can take after the completion of the session. That is up to the coordinators to decide what to do. But I'm comfortable either way. You can ask queries in between also or at the end also, as you may please. So with this, we'll start with the syllabus for today. Just a minute. Screen is not moving. स्क्रीन आगे नेक्स्ट स्लाइड क्यों नहीं आ रहा है? नेक्स्ट स्लाइड क्यों नहीं आ रहा है? स्लाइड क्यों नहीं आ रहा है? एंड क्यों कर रहा है?
अच्छा ये पेज एंड
अरे
जब
एक मिनट आना बेटा तू.
हाँ ये पेज
ये तो फर्स्ट स्लाइड पे ला.
होम, ये पेज डाउन और ये
ठीक है. ठीक है.
वो पेज डाउन.
ठीक है. आसपास. ठीक है. ठीक है. So the syllabus for today is like, I have given an index. We'll be covering section 1023C. And as I said, I'll be covering only the amendments part, section 11 to 13. Then we'll talk about section 12AB, which is the registration section. Then we'll talk about section 80G, which is the deduction to the donor section. Then we'll touch upon 115 TDTETF, 115 BBC about anonymous donations, 115 BBI specified income, then 56.210, which is a very small amendment relating to taxability of gifts to the specified persons. Then we'll talk about 271 AAE, which is a penalty for application of income for the benefits of specified persons. Then 234G, 271K, late fee and penalty sections for delay in filing form number 10BD. Then we'll talk about the most critical thing, whether what form should we file the return in, whether it should be ITR 7 or whether it should be ITR 5. When is the time you are supposed to file ITR 5 and when is the time you are supposed to file ITR 7? Then we'll talk about some recent CBDT circulars and notifications and the most relevant ones. There have been a lot of CBDT circulars and notifications, but I'll be covering only the specific ones or the recent ones and only the which are important for compliance in the coming filing season. Then we have Income Tax Act 1961 versus Income Tax Act 2025. As all of us are aware that the Parliament has passed the Income Tax Act 2025, and the act will be effective 1st April 2026. This particular act has, reduced a lot of jargon as far as the income tax, when you compare it with Income Tax Act 1961. And when we talk about the NGOs, that is also simplified, because the provisions and the provisos, there are a lot of provisos, lot of explanations. So everything has been, they have tried to put it in one place, and they have successfully done the work till now. What I can see is, so what we will do is, I'll give you a comparative chart which will tell us what is the subject, how that subject was covered in Income Tax Act 1961, and how that subject is covered in Income Tax Act 2025. For you to understand that how it is made, how it is, clubbed at places wherever required. So with this, we get into the sections, and we start with what we are trying to convey today. So this is about section 1023C. Now 1023C, earlier it was a totally different regime as compared to section 11. Now 1023C has been merged into section 11 with the recent amendments, effective 1st October 2024. Now, as far as 1023C is concerned, the relevant subsections are 3AB, 3AC, 3AD, 3AE, and 6 and 6A. Now, what is 3AB? 3AB is when we talk about, institutions or trusts whereby the government has contributed maximum amount. When we talk about maximum amount, it is not defined, but in common parlance, when the government has funded more than 50% in the particular institution, it will fall under 3AB, and more particularly related to education. When we talk about 3AC, it is related to medical institutions. When we talk about 3AD, 3AE again, first 3AD is regarding educational institutions. Over here, the government has not done any substantial contribution, as we were seeing in 3AB. 3AD is a section which is monitored as per the receipts of the organization in a particular financial year. Earlier, the limit was 1 crore. Now that limit has been revised to 5 crores. Now, there are other amendments also simultaneously. 3AE talks about the medical institutions. And when we talk about the limit of 5 crores, that 5 crores ka limit has to be seen in totality. Earlier, it was not so. Earlier, if we had 5 institutions or 5 educational institutions under one particular PAN number, each institution was given a limit of 1 crore. Now, this 5 crore ka limit is in totality. Even if you are running 10 schools in a particular PAN number or in a particular educational institution, all the entire receipt of all those 10 institutions or schools will be clubbed, and then it will be tested to the limit of 5 crores. If it is below 5 crores, we will fall under 3AD. Similar is the case with the medical institutions. Now, there is one more amendment. We must have come across institutions who are running an educational institution as well as a medical institution. The ideal example is a medical college. When we have a medical college, they are teaching the students, they are educating the students, as well as they are running a hospital also to give practical knowledge to the students. So when we have to club both the receipts from both the types of activities to test to the limit of 5 crores. When we club both the amounts received from both the activities, if the limit is exceeding 5 crores, we will not fall under 3AE. Otherwise, we will fall under 3AD, 3AE. So in 3AD, 3AE, 3AB, 3AC, in all these 4 subsections, you need not take any approval from the Income Tax Department, as we are taking it for 12A. Similarly, for all these 4, one is very important, that if you're not falling in any of these 4 subsections, you are falling in 6 and 6A. Now, under 6 and 6A, you are supposed to apply to the Income Tax Department, as we are doing in the case of 12A. You have to apply, you have to get the registration done, and then if ATG, again, as a matter of fact, it is optional. If you feel you have to go for ATG also, then you have to go for the approval of ATG also. So that is how the entire thing works as far as 1023C is concerned. So I have given some more details in my PPT. I have already shared the PPT with the coordinators of ICAI. So anybody interested can take the PPT from there, or they can place a request to me also. I will share the PPT with them. So this is about 1023C, because this has reduced to a very great extent after the merger of 1023C entities with Section 11 entities. So as I've already covered this, no new applications after 1st October, effective 1st October 2024 will be taken under 6 and 6A. The applications prior to 1st October 2024 were supposed to be given the orders by 31st March 2025 for a period of 5 years. So the cutoff is 2029-30. 2029-30 1023C का regime will end. These are the last organizations which will be given approval under 1023C. After that, 1023C will no more be relevant because it has been merged with Section 11 entities. So these are the amendments related to 1023C. Then we will be covering now key provisions of sections 11 to 13. Now, everybody, I believe, is aware that charitable trusts, NGOs, Section 8 companies, as far as taxation is concerned, they are governed by Section 11, 12, and 13. They are not governed by the normal profit-making entities sections. There are different sections for for NGOs. So when we talk about Section 11, Section 11(1)(a) is the most important section, which talks about the fact that all the NGOs registered under Section 12(a) are given a statutory deduction of 15% of the cumulative receipts of the particular year. 15% statutory accumulation, and that accumulation is for perpetuity. So that is 11(1)(a) for you. You have to spend 85% towards the objects of the trust, and the rest of the 15% can be carried over for your future objects or future promotion of the activity or the objects which are covered by your constitutional document. So that is about 11(1)(a). And mind well, nowadays only charitable institutions or trusts or companies only into charitable or religious purposes are governed by Section 11(1). Earlier, there were entities who were partially charitable and partially commercial. Nowadays, those entities are not permitted for the exemptions to be obtained under these sections. So 11(1)(b) is no more relevant. Of course, but before 1961, if they are formed, of course, they'll be enjoying the provisions. But otherwise, new organizations should be wholly into charitable or religious purposes so that they can avail the exemption under Section 11, 12, and 13, subject to 13. Then we come to 11(1)(c). When we talk about 11(1)(c), 11(1)(c) tells you that you can spend money abroad on the objects of the trust, provided those objects are either notified by the central government or you are obtaining an approval from Central Board of Direct Taxes. Now, when you are going for registrations, this particular thing is falling into your specified violation also. That if you spend money abroad, it will be termed as specified violation, subject to the approval, of course. If you have the approval, it is fine. But otherwise, you got to have approval with the CBDT. We are facing challenges nowadays when we are going for 12A registration. The department is telling us that any object related to money being spent abroad will fall under specified violation and we will not grant 12A registration. Of course, the judicial pronouncements are flowing in. Some judicial pronouncements are saying that whether the money has been inappropriately spent or the money has been spent in violation of 11(1)(c) has to be assessed by the assessing officer, not by the authority granting the 12A registration. But of course, still I think there are some more decisions to come. After that, there might be some change as far as this particular section is concerned. Otherwise, the department at the moment is insisting upon these clauses to be removed. Only then they will grant 12A registration. Of course, I mean, this is what we are facing in Mumbai jurisdiction and in Maharashtra, because I am practicing in Maharashtra. I don't know what is the position with the other CIT offices, because many a times I have seen that there is some inconsistency as far as the approach taken by different officers. So that of course is to be addressed. Practically, whenever you are facing this particular situation, you have to make your case before the authorities, or you have to make the necessary changes in your constitutional document so that the 12A can be granted to you. So this is about 11(1)(c). When we talk about 11(1)(c), I would like to highlight a few points. One point is that what if you are spending less than 85% towards the objects of the trust in a particular financial year? Do we have any remedy? Yes, we have remedy. We have a remedy in the form of Form 9A. We can file Form number 9A and we can claim that particular amount as deemed application for that particular financial year, which is to be spent in the subsequent financial year. Let me take a practical example. Suppose if you are receiving some money in the month of March or in the end of March for a project which is to be executed in the subsequent financial year. Now, what will happen is you have accumulated the money, you have a surplus, you will end up paying taxes, but department has provided form number 9A. You can file form number 9A. That particular amount will be treated as deemed application for that particular financial year, and the department will allow you to spend that money in the subsequent financial year. Mind well, the department does not scrutinize the form number 9A. It is just a sort of an intimation to the income tax department. That is one situation. There may be another situations where you are planning to execute a big project, which may run over a period of say 2 years, 3 years, 4 years, 5 years. So in that circumstance also you can file form number 10, which is designated by section 11(2) of the Income Tax Act as of now. You can file form number 10. You can accumulate that money for a period of 5 years. But at the end of 5 years, if the amount is left unspent, that will be taxed as per the provisions of the Act. And the provisions of the Act are saying that you will be taxed at maximum marginal rate. So these are the advantages when you register yourself under section 12A. One thing is you can accumulate 15%. The other thing is you have an option of form number 9A. The third thing is you have an option of filing form number 10. And all the participants on board may be very much aware that capital expenditure spent towards the objects of the trust can be directly debited to the income and expenditure account, which is also a big advantage as far as charitable trusts and NGOs are concerned, provided they are registered with 12A of the Income Tax Act. Then we have 11(1)(d). 11(1)(d) is regarding corpus donations. Any amount received as corpus donation is straight away capitalized. It is not routed through your income and expenditure account. That is not taxed. It is a capital receipt. That everybody is aware. But I would like to draw your attention towards an amendment by the finance from the effective financial year 2017-18 that one trust cannot make a corpus donation to another trust. Earlier it was allowed, but now it is not allowed. So this is about section 11(1)(d). Then we have explanation to section 11(1), which talks about the disallowances. You are supposed to deduct tax on your expenses similar to profit-making entities. If you are not deducting tax as per the prescribed rules, 30% of the expenditure will be disallowed. If you are making an expenditure of more than 10,000, or if you are making a payment of more than 10,000 in cash or not through banking channel, that will be disallowed. That will be added back to your income. So this is a very normal provision. I need not elaborate on that. We have explanation 3A to section 11. Now this was introduced by the Finance Act 2022 with effect from 1/4/2021. In other words, it was a retrospective amendment. Now, this particular amendment says that whatever donation received by the charitable or religious institution, this is particularly for religious institutions. So whatever amount received by the trust, the trustees can transfer a particular amount from this particular amount which is received towards the corpus with the specific mention on the objects for which the money will be used. Now, this is an exception because otherwise when we go to section 11(1)(d), 11(1)(d) says that whenever you are receiving any corpus donation, that corpus donation should be accompanied by a direction letter by the donor saying that this amount should form part of the corpus. This is the exception to 11(1)(d), whereby the trustees are deciding that this amount we will transfer to corpus and we will use the amount for the purpose for which we have accumulated. So this is an exception to section 11(1)(d). Then we come to explanation 3B to section 11. Deemed income, that is, becomes taxable in the year. Deemed income becomes taxable in the year, subsequent year that we have just covered. Then there are 2-3 more very important amendments. One amendment is regarding the amount spent from loans and borrowings. Now, when does this situation arise? Now, suppose in a particular financial year, you have received an amount of say 10 lakhs as your total receipts, and you have spent say 11 lakhs. So ideally, that amount is either spent from the loans and borrowings, or the amount is spent from the corpus which is accumulated with you over the years. In both these situations, the amount spent from either loans and borrowings or amount spent from either corpus will be disallowed to you in that particular financial year. That amount will be allowed to you as an application towards the objects of the trust when the corpus is reimbursed or when the loans or borrowings are repaid. That is the time when you will be allowed that amount as application towards the objects of the trust. In the year in which you spend, it will not be allowed, and the balance sheet or the financial accounts will not change. This particular amendment or this particular, not amendment, this particular adjustment has to be done in the computation of income. And subsequently, when you are repaying the loan or when you are reimbursing the corpus also, it will be through the computation of income only. And the timeline given for this particular repayment or reimbursement is 5 years. You have to either repay the loan, or you have to repay the loan in 5 years, or you have to reimburse the corpus in a period of 5 years. So this was a very recent amendment by the Finance Act 2021. So whoever are preparing the accounts have to be very careful that if there is a shortfall or if there is a usage of the amount from the loans and borrowings or the amount is used from the corpus, the ITR 7 is also very specifically asking these details. So you have to be very careful while filing the audit forms as well as the ITR 7. Then we have deduction should 5 years we have covered. There is one more amendment regarding inter-charity donations. We talked about corpus donation. Corpus donation from one trust to another trust is not allowed. That is for sure. Second thing is that when you are making a donation from one trust to another trust, this amendment has been brought by the Finance Act 2023. So the 15% of the amount which is prescribed by section 11(1) will be disallowed to the donor trust. In other words, suppose if you are making a donation of 10 lakhs from A trust to B trust. So A trust will be disallowed the deduction of 15%. That means the donation amount of 10 lakhs will be treated as if the donation amount is only 8.5 lakhs. And why this has been done? Because earlier there was a round tripping of funds. The funds were moving from trust A to trust B to trust C to trust D. And then ultimately the money was not spent towards the objects of the trust, it was lying in the books, and the purpose for which the trust was made was not met. So that is the reason this particular amendment has been brought. But mind well, if you are in a position to justify your case, let me take one more example. If you are sponsoring the education of say 4 or 5 students in a particular educational institutions, you will not be in a position to verify the beneficiary. The school will inform you that these are the 5 students who are deserving or who are, they need some financial help. So that is how we will come to know about the students. So, and in other case also, we will try to make the payment to the educational institution. We will not make the payment to the students. So when we make the payment to the educational institution, we should have the proper documentation and we should be in a position to justify our case that we are actually helping the beneficiaries. We are not making any donation from a trust to another trust. And I have seen in my assessments that the department is accepting, because this particular change has been brought to check the round tripping. They will not penalize the genuine donations. So mind well, we can always make donations to trust, but we should have proper documentation to justify our case. So this is about inter-charity donations. These are the consequences that we have already spoken about, that when you accumulate the money and if the money is to be spent in the subsequent years, if the money is not spent in the subsequent year, the money will be taxed as a specified income at maximum marginal rate. Now, these are the timelines. Form number 10 ka timeline is 31st August. Now, when we are sitting here, 17th of September, the timeline has already gone. Then 10B, 10BB, 30th September, as we already spoke earlier. For return filing, it is 31st October. But I would like to stress upon the timeline for form number 10, which is 31st of August. Last to last year, this particular timeline was introduced. Then in the last year, there was a circular saying that even if you are filing form number 10 before filing the return, it is fine. But there was no specificity as to whether this is for a particular year, this particular year, or for all the coming years. But what I have understood in the last year also, the department was not keen that 31st August should be the date of filing. We have been filing before the due date. We have tried to abide by 31st August, but then too, if it was not possible, suppose some client is coming late, some figures are being finalized later on, we have filed the returns after form number 10 and form number 9 after 31st August also. But department has not penalized us, provided it is filed, the return is filed before 31st of October. So this is about the timelines. Now let's see what circulars we get for this particular financial year. That has to be seen. 11.3 talks about, 11.2 talks about the accumulation for a period of 5 years. 11.3 talks about, when you violate section 11.2, then we have 3A also, whereby at times it so happens that it becomes difficult for an organization to spend money on the object for which the amount has been accumulated. So this is the time. Suppose, let us take the example of COVID. When all of us were facing COVID, it was difficult to meet the objects of the trust. So 11.3A comes to your rescue. In such circumstances, you can go to the income tax department. You can write to the assessing officer saying that this amount was accumulated for so and so purpose, but due to so and so circumstances which are unavoidable, we are unable to spend this amount on the objects for which the amount is accumulated. So allow us to spend the amount on the objects as per the constitutional document. Whatever other objects we have covered in our constitutional document, please allow us to spend the money on that. So the department, after verifying the merits of the case, will allow you to spend the money on the other objects, provided it is covered by the constitutional document of yours. 4 and 4A talks about property held under trust, includes business undertaking. When we talk about 11.4 and 4A, they are talking about, when you read 11.1, it says income generated from the property held under trust. So property held under trust will include business undertaking also. When we are running a business undertaking, that is also property held under trust, and the income generated from that particular business will be accounted for. But the only difference is that separate books of accounts have to be maintained for the business undertaking, and whatever surplus is to be taken to your income and expenditure account, and that money has to be spent towards the objects of the trust. So separate books of accounts for a business undertaking is must. So that you have to maintain properly, so that we can justify that the surplus from the business undertaking is spent towards the objects of the trust. We have section 11.5, which talks about the specified modes for investing funds of the trust. Now, when you have corpus with you, when you have accumulated amount under section 11.2, these are the amounts which are to be invested as per the modes or as per section 11.5 of the Act. I'm not going through each and every item of section 11.5. You may go through it. I would like to highlight a few things. I receive many queries at the end of the financial year, that is 31st March, कि सर हमारे पास बैंक अकाउंट में पैसा पड़ा है, but we have not purchased FD or we have not invested in it. So my take clause number 3 says that deposit in any account includes current account with a scheduled bank or a cooperative society. If you have a credit balance in the bank account also, that will be treated that as if you have complied with section 11(5) of the Act. It is not necessary that you have to take FDs or you have to invest in some government bonds or securities. Even if the money is with the scheduled bank, you have complied under section 11(5). Then section 11(5) covers immovable property also. Section 11(5) talks about depository of shares also, shares of depositories also. Then section 11(5) talks about stock certificate as defined by Sovereign Gold Bonds 2015 also. This has been introduced later on. This is a very inclusive kind of a section because every now and then there are different financial products. Those products are included in this particular section 11(5). So this is about section 11(5). Here I have covered a circular which is being issued by the Maharashtra Public Trust Act. Whoever are practicing in Maharashtra can go through this particular circular. This circular also talks about the modes of investments where we can invest. Of course, there is a lot of clarity required on this circular also. But for academic purpose, I have included this circular. The participants may go through it, and people practicing in Maharashtra, if they have any specific query related to this particular circular, they can always get in touch with me so that we can deliberate upon it. Then we come to section 11(6). If acquisition of asset has been claimed as application. Now, what does this section say? Earlier, what was happening? People were claiming the value of the asset also in the income and expenditure account as amount spent towards the objects of the trust, as well as they were claiming depreciation also. So they were taking double deduction. But now that controversy or that ambiguity has been put to rest now. Now, if you have debited the cost of the entire asset to your income and expenditure account, you will not be allowed depreciation. That means any of the two things you will be allowed. Either you debit the entire amount of the asset to the income and expenditure account or you claim depreciation. 11(7) says that either you can claim deduction under section 1023C or you can claim deduction under section 12AA or now 12AB. Earlier 12AA and now 12AB. Earlier what was happening is the people who are not having 12A were claiming deduction under section 1023C. And 1020, vice versa was happening. So that ambiguity has been put to rest by the amendments under section 11(5). Now there is one more amendment which says that whatever expenditure incurred or whatever earlier the accrued expenditure, the expenditure which are accrued to you, you have booked the expenditure but you have not paid the amount till now. Now with these amendments, what has happened is you will be allowed to treat a particular amount as application towards the objects of the trust only when the amount is actually paid, irrespective of the method of accounting that you are following. So which in other words means that suppose if I book an expense in the financial year 25-26 and I don't pay that amount in this financial year, so I will have to add back that amount in my computation. When I prepare my computation, I will have to add back that amount. And then when I actually pay that amount, I will claim that as application in that particular financial year when I'm paying the amount. So this is a very recent amendment. Of course, this will increase a lot of work as far as calculations and computations and all those things are concerned. But yes, we have to abide by it. Then we have section 12(1) which talks about voluntary donation. Then we have got 12(2) which says that any benefit given to the specified person by providing free services or by providing concessional services, it has to be added back to your income and then taxes have to be paid. Tax has to be calculated accordingly. Of course, a reasonable amount of expenditure is always allowed. Anything which is, in other words, anything which is unreasonable will not be allowed. Then we come to the registration part. 12A1AC is the section which talks about the registration part. I'm not going into each and every section of 12A1AC. I have prepared a chart which will come in the later slides. The participants may go through the slide, all the timelines, the forms to be filed and the order in which form you will get. All those things are mentioned in detail. 12A 1AC is the section for registration. The respective principal CITs or the CITs will, we have to apply to them, and we will be heard. We will be issued notices when we are talking about regular registration. Now provisional registration ka option is also there till now. So anybody, any trust which has not begun with the activities can go for provisional registration, and the trust which has begun with the activities can go for regular registration for a period of 5 years. 12A 1AB talks about the books of accounts to be maintained and the audit process which is to be followed and the audit form which is to be used, whether it will be 10B or 10BB. Now, when we talk about 10B and 10BB, 10B is for charitable institutions with a receipt, gross receipt of 5 crores and above, or if they have money, they have spent money abroad, or if they are registered with FCRA, under FCRA. So these are the three types of organizations which are supposed to file form number 10B. Mind well, if we have a FCRA, the limit is not relevant. If we have a FCRA, we have to file form number 10. If we have spent money abroad on the objects of the trust, we have to file form number 10B, sorry, irrespective of the turnover or irrespective of the gross receipts. Coming to 10BB, anything below 5 crores, we have to file 10BB. So now 1282 talks about the effectivity of the registration. Now suppose if you have an old trust, it is registered under section 12A in the year 2010, and now you are following the due process in the new regime. So your trust will be said to have been registered from the year 2010 till date. When we talk about conversion of a provisional registration to a regular registration, the regular registration will be granted with retrospective effect. For example, when you obtained provisional registration in the financial year 21-22, that provisional registration was granted to you for 21-22, 22-23 and 23-24 financial years. Now, when you go for a regular registration, the regular registration will be granted for a period of 5 years, effective financial year 21-22. So that is what it means when we talk about retrospective registration, when we convert a provisional registration to a regular registration. Procedure for passing the order. Now, what is the time limit for passing the order by the Income Tax Department? The time limit is within 6 months from the end of the quarter in which the application is made. Now, suppose if you are making an application before 30th September now, the time barring date will be 31st March. The department has to give the order, whether rejection or approval, before 31st March 2026. So those are the timelines. Then Principal Commissioner to call for documents. Nowadays, they have introduced a system of representations. The assessing officer can make a representation to the Principal Commissioner or the Commissioner exemptions, or the Principal Commissioner or the Commissioner exemptions can suo moto take an action, or if something pops up from the risk management strategy. In all these three circumstances, the department can suo moto take a decision regarding a trust if they are into specified violation, they are not meeting the conditions under which 12A has been granted. In that case, the 12A can be rejected or cancelled. So that is what 12AB4 talks about. Coming to specified violation, I am not reading all the specified violations. Why? I will go into why the specified violation has been brought into. Why this explanation has been brought into. This explanation has been brought into because earlier all the violations were scattered throughout. Under section 11, 12, 13, explanations, provisos. So those, due to that scattered provision, due to those scattered provisions, there was a lot of confusion. So that is the reason by the Finance Bill 2023, with effect from 1/4/2023, the department has introduced specified violations. Now, anything falling in specified violations, your 12A will come into challenge. You will be put to tax at maximum marginal rate and you will be penalized accordingly. Then specified date is what we are saying, that within 6 months from the end of the quarter in which the representation has been made to the concerned PCIT exemptions or CIT exemptions. Now, there are certain landmark amendments now. Section 12AB4 of the Income Tax Act. What are these amendments? Now, as to provide the application for registration of trust is not complete. Earlier, what was happening is there was a specified violation which says that even if the application is not complete, you will lose the 12-way registration. Now that was a bit, that was a bit harsh. So that is why representations were made to the department, and the department has very rightly come up with an amendment saying that even if the application is incomplete, we will not say that this is a violation, specified violation. They will consider our case and they will try to get the mistake rectified, or they will try to get the necessary information in the form through a notice. So this amendment is with effect from 1st April 2025. Section 13.1, I'm not going into much detail because Section 13.1 talks about the situations whereby you will be denied exemptions under Section 11. Specified persons are defined over here. The situations whereby you will the deduction or the exemption will become a challenge is defined over here. So 13.1, 13.2. What does 13.1 say? The applicability of Section 13 has been enacted as an exception to Section 11. So this is 13.1. These are the situations where 13 you will lose the exemptions. Then 13.3 defines the specified person. Now in this also there has been an amendment. Earlier it was a very elaborate section. The relatives were covered and many other unimportant people were covered. They were specified as specified persons. But now amendment is in 13.3 has been there. Only the relatives of the trustees are covered. Otherwise, the distant relatives are not covered. The amounts, the specified limits have been changed. Earlier, the limit was 50,000. That 50,000 ka limit is very small. So that now that limit has been enhanced. So here are the limits, and these limits are effective from 1st day of April 2025. Anonymous donation. 13.7 is an important thing here. Anonymous donation. When we talk about anonymous donation are taxed at maximum marginal rate. Maximum marginal rate subject to limits. And the limit is 5% of the total receipt. Excess of 5% of the total receipts or 1 lakh, whichever is higher. Now, when we talk about anonymous donations, I have been receiving many queries from my clients saying that, sir, UPI se jo paisa aata hai, uska kya kare? We get the money in the bank. We don't know the identity of the person. But department is a bit lenient on that. Department says that as long as the money is received through banking channels, it is fine. It will not be treated as anonymous donations. 13.8 is the other very important section over here. 13.8, what does 13.8 say? 13.8 is related to the proviso to Section 215. I have not covered 215 today, but there is a proviso to Section 215. Section 215 talks about it. It is a definition of charitable purposes. And proviso to that says that when you are into general public utility and you are into commercial activities whereby you are spending or whereby you are earning more than 20% of the total receipts from commercial activities, you will not be treated as charitable organization. But 13.8 of course comes to rescue, because suppose if 12A is cancelled or 12A is rejected, the provisions of accreted income will kick in. So that is why 13.8 has been enacted. 13.8 says that you will lose the charitable tag only for the year in which you are crossing the limit. Otherwise, you will not lose that tag. Suppose in the subsequent year, you are not crossing that threshold limit, you will be enjoying the benefits of Section 12A. So that is what 13.8 says. 13.9 is an old thing. 13.10 is a new amendment. 13.10 is a very welcome amendment, because earlier what was happening is if the trust is not registered, if the trust has not got its books audited, in those circumstances, the entire gross receipt was put to tax at maximum marginal rate. So 13.10 says that if there are certain violations, for example, if you are violating Section 13.8, or if you are violating the provisions of audit, you have not submitted the return, or you could not submit the return before the due date, then in that case 13.10 comes to your rescue. You can opt for 13.10 and the expenses will be allowed to you subject to conditions, and you will be put to tax only on the excess of income over expenditure, not the entire gross receipts. So this is about 13.8, 13.10, sorry. Set off 13.11 says that set off will not be allowed. Now suppose if in a particular financial year there is a deficit and in the subsequent year there is a surplus, the deficit of the earlier year will not be allowed to be adjusted against the surplus of the subsequent year. Earlier there was an ambiguity regarding this. Now this amendment has put this ambiguity to rest. So this is broadly about 13, section 13. Then 12AB, this is the chart which I was referring to regarding the registrations. You may go through the registrations. The entire details are mentioned in this chart. Then the timelines we have already discussed. Within 6 months from the end of the quarter in which the application is made. The renewals are in process. The applications for renewals we are already doing under 12A1AC2. Then there is one more welcome amendment as far as registration is concerned. The Income Tax Department has categorized a trust into a small trust and big trust. Only two categorizations. The small trust is the trust whereby the gross receipt of the trust is less than 5 crores for the earlier 2 previous years. And the earlier 2 previous years, less than 5 crores. Then when you're talking about a big trust, in the earlier 2 years, if the receipt is more than 5 crores, you will be termed as a big trust, and in that, for that big trust, you will get a renewal only for 5 years, whereas for a small trust, you will get a renewal for 10 years. This is henceforth, of course, from 1st day of April 2025. Then ATG, same timelines. ATG, we have got 4 sub-clauses. ATG, there are no condonation powers. In 12A, we have got condonation powers in all the subsections from 1 to 6. DDTETF. This is the accreted income. Suppose if you lose your 12A, it has been cancelled, rejected, or if you have been found doing ingenuine activities, then in that case 115 DDTETF will kick in, and it says that you will be taxed on accreted income. How is accreted income calculated? The fair market value of the asset minus the fair market value of the liabilities. The surplus will be put to tax at maximum marginal rate. So this is about accreted income. Earlier 1023C, there was no accreted income, but now everything has been clubbed and everything has been merged. Then we come to 115 BBC. I think we have covered when we were referring to section 13.7. This is about anonymous donations. So when we are filing the returns in this season, we have to be careful about anonymous donations. Then we talk about 115 BBI. This has been introduced with effect from 1/4/2023. This is specified income. What is the definition of specified income? Income accumulated or set apart in excess of 15%. Accumulated amount is not invested in the specified mode as per section 11.5. Income accumulated and not applied for charitable purposes. Income applied for benefit of specified persons, and income applied for charitable purpose outside India in violation of section 11.1c. All these things are falling in specified, all these incomes will be termed as specified income, and they will be put to tax at maximum marginal rate. 56.210, gifts from a trust to specified persons or interested parties was earlier going scot-free. 56.210 has been suitably amended. Any gift to a specified person of a trust or a trustee of a trust will not enjoy the exemption. It will be put to tax. Then we have section 271 AE of the Income Tax Act. We have to be very careful about this. A penalty equal to 100% of the amount applied for the benefit of the specified person will be levied on first violation. And second violation onwards, the penalty will be 200%. So this has to be seen very carefully, because in many organizations we see that money spent for the advantage of the specified person. So we have to be very strict and careful about it when we are filing the returns and doing the audits. 234G is for delay in filing form number 10BD. But of course, in the last 2 years, we have been seeing that the department is not recovering the late fee. And the due date for filing 10BD form is 31st of May. And we have seen many trusts whereby, it is difficult to file before 31st of May until unless the trust is very properly managed. Most of the trusts have got meager resources and they don't have a team for accounts separately. So that is the reason there is a delay. But of course, the department has been very lenient as far as the late fee in filing 10BD is concerned. One-time penalty is also prescribed for a delay in filing 10BD. But till now, we have not come across any such penalty. Now, when we talk about ITR 7 and ITR 5, there is a lot of confusion that when to file ITR 7 and when to file ITR 5. So now the things have been simplified. Earlier there was a lot of confusion. Now that the things have been specified and very clear now, you have to file ITR 7 only when you are registered under Section 12A. Mind well, ITR 7 will be filed only by organizations or trusts having 12A registration. Any organization not having a 12A registration should file ITR 5. So this is the simple classification when we talk about ITR 7 and ITR 5. So be very careful. When you are registered under Section 12A, file ITR 7, otherwise file ITR 5. So we are coming to the important circulars. These are the circulars when there is a delay in filing form number 9A, form number 10, form number 10B. There are many trusts where there was a delay in filing form number 10B and 10BB. So condonation provisions are in place. 365 days ka up to 365 days ka condonations will be granted by after looking into the merits by the CIT exemption, jurisdictional CIT exemption. Where there is a delay beyond 365 days up to 3 years, those cases will be referred to the Principal Chief Commissioner of Income Tax Delhi. And very recently we have received one more circular which says that condonations beyond 3 years will not be entertained. Condonation applications beyond 3 years will not be entertained. Now, what does that mean? Suppose 31st March was the time you should have filed, 31st March, say 2025, was the time barring when you were supposed to file the condonation application. And you file the application after, say, 31st March 2028. So, those applications will not be entertained. The tax liability ascertained will have to be paid. Of course, you may go to the High Court, you may go to the appellate authorities. But as of now, the position of the law is that if there is I have come across many organizations whereby the 10B was to be filed by, say, 2021. And now, till now, they have not filed the condonation in filing form number 10B. So in those cases, it has become a challenge. Clarification regarding inter-charity donations with respect to the amendment. The 15% which will be disallowed need not be invested in the mode specified under Section 11.5 because we are paying taxes on the same. So this was clarified by the CBDT via circular. I think 10B and 10BB we have already discussed when 10B is to filed, when 10B is to be filed and when 10BB is to be filed. The department has come out with a notification number 94. So whoever are auditing the trusts, we have to be very careful. We have to refer to this notification. This notification talks about a lot of things, about the books of accounts to be maintained, about the place where the books of accounts are to be maintained, about the procedure to inform the change in the maintenance of the books of accounts. Suppose if you are changing the place where the books of accounts are kept, you have to intimate to the income tax department within the prescribed limit. You have to keep the accounts for a period of 10 years, whether in electronic mode or physical mode, whatever is comfortable to you. So earlier there was no clarity. Now the books of account, by this notification, the department has made very clear that what all has to be done as far as the books of accounts are concerned. So we have to be very agile about this. Form number 10 ka certain changes were prescribed by notification number 96. So now I think most of us are aware what changes have been done in form number 10. But of course, I would like to put one more thing across over here, that after all these changes, now in the subsequent year, we'll be having a totally new set of sections and new set of forms. So we have to be ready for that change again, because it is coming soon. In the next 6 months, we'll be having certain new things now. So then that is what I was referring to. Coming to the last particular subject or point of my syllabus. It is Income Tax Act 1961 versus Income Tax Act 2025. So I have prepared a tabular form which says that what was covered earlier by what section and it has changed to what section. For example, definition of charitable purpose was first governed by section 215. Now it is governed by 223. 12A, 12BB, the entire thing is introduced in section 332. 11.7, entire thing is changed to 333 now. Section 11 was scattered into many places, explanations and all those things. All those things have come under 334 to 336. So these are this is the change now, which we have to get used to now from the next financial year. And I think the Income Tax Department or the Central Board of Direct Taxes or the Finance Ministry has done a very commendable job as far as ITA Income Tax Act 2025 is concerned, because it is easy to understand now as compared to the earlier Income Tax 1961. Earlier Income Tax Act 1961 became complicated because of the explanations, provisos added again and again, time and again. So that is the reason now. Of course, let's see what happens in say 5 years, 7 years, 10 years down the line. But of course, as of now, the Income Tax Act, I have gone through a few sections. Of course, the charity part, NGO part, of course, I have seen the entire thing. So I think it is to a very great extent simplified. So with this, I think today's syllabus, I have covered the syllabus for today, because this subject is huge, large, but 1 hour period is very small for this. But I have tried to do justice to whatever I have been delegated with. So with this, I mean, back to the coordinators, and the house is open for queries if anybody has got any queries.
Thank you, sir. Some questions are here.
Yeah.
Whether university in Rajasthan need to get registration for Devastan Vibhag?
Devastan Vibhag.
Yes, sir.
See, actually, Rajasthan is a bit of a complicated subject. The reason being that we don't have a charity commissioner over there. All the NGOs are so-called registered under Devastan board. We have a Societies Act also in place. We should explore registering the educational institute under the Societies Registration Act if Rajasthan has got its own Society Registration Act, or the Society Registration Act 1860 is the Pan India Act. So I think the educational institution should register itself under the Society Registration Act 1860, which is the Pan India Act.
Okay. Sir, second question is, sir, filing for 10AB relating to renewal of registration. Originally, the society is registered under section 12A 1 AC1. The section notes provide in the drill down of the form 10AB start with section 12A 1 section AC. Of provision second, this section talks about the registration obtained under section 12AB. The registration has been obtained under section 12A or not under section 12AB. Whether section notes has been selected now for renewal of the registration.
I am not getting the query, because I think the participant can, he can contact me directly. He can tell me his exact query, and I'll give a solution to it. Because also, but what I have understood is that the trust is registered for a period of 5 years. That period is coming to an end on 31st of March 2026. We are applying for renewal before 30th September 2025. And that form, the form in which the application has to be made is form number 10AB. And the section under which the application has to be made is 12A 1AC subclause 2. Then
Okay.
too, if further clarity is required, they can always write to me or they can talk to me.
Okay, sir.
Yeah.
Sir, whether Devastan Vibhag Rajasthan registered is necessary for permanent registration of charitable trust as department reject permanent registration on this issue.
Yes, nowadays the department is asking for a registration certificate. Why this issue has cropped up now is earlier the trusts were formed just by making a trust deed and they were not even registered, they were not even reported to the sub-registrar's office. And now the department is asking for a registration certificate. And as I said earlier, that in the absence of a charity commissioner's office, it is a dilemma that whether we should register ourselves under the Devastan board. I believe that if it is a charitable trust or a religious trust, they should register under Devastan board. And if it is a society sort of a thing, they should register under Society Registration Act. But of course, they have to get themselves registered, get the certificate, and then hand over the certificate to the department for regular registrations.
Thank you, sir. One more question, sir. Which form to be used if claiming exemption under section 1023C third AB AD?
Ravi Anshul bhai, Ravi
sir.
sir, I'm Satish Gupta. Let me ask one question in that respect, which the Anshul asked you just now.
Yeah.
That is it necessary to get registration with Devastan Vibhag because it is not for throughout the India. Only
Yes.
there is a law of few states like Rajasthan that there is need to get registration from Devastan Vibhag or the Indian Trust Act or anything else. But there is no rule in the entire India.
Yes.
So whether it is compulsory to get registered from the Devastan Vibhag or there is any way to the trust not to get registration with the Devastan Vibhag and to continue with the society registration or any other registration to get registration under Income Tax Act. What is your viewpoint on this?
See, my viewpoint is very simple, sir, on this. That when we are talking about state specific, now let me explain how the things are being worked out in Maharashtra. So you will get a reasonable understanding that how it will be done in Rajasthan. In Maharashtra, we have a charity commissioner. Under the charity commissioner, we can register under Society Registration Act 1860 also, as well as Maharashtra Public Trust Act 1950 also. So as I said earlier, in Rajasthan, you got to be registered under the Devastan board or the Society Registration Act 1860.
No, we are registered in the Society Act.
Society Act 1860.
But we are not registered with the Devastan Vibhag. Department is continuously asking for the Devastan Vibhag registration.
Department, Income Tax
And Devastan
Department.
Vibhag is getting at least 3 months, 4 months, 5 month time to give the registration.
Yes, sir. But in my humble opinion, if you are registered under the Society Registration Act 1860, it is a fair enough registration, and the department should not object in granting 12A to you.
So what about the Nobel Society decision of the Supreme Court?
Noble Society decision. Noble Society's decision is about Society Registration Act.
No, that is
about
that is not talking
1023C.
about any. That is talking about if any registration is required, that should be done. What
No,
is problem that in Rajasthan there is a need for every trust to get registered with the Devastan Vibhag.
Devastan board and
Yes.
Yes.
Apart from the society registration. So what the Rajasthan commissionerate of this particular income tax commissionerate for this charitable trust, etc., they are asking for the registration with the Devastan Vibhag. And the Devastan Vibhag is taking a very long time to give the registration and that cumbersome process and that there are several other things.
I am very much aware.
Do you have any judicial pronouncement which can help the Rajasthan Trust? Because we have one pronouncement of the ITAT Jaipur in favor of the trust that there is no need to get registration from the Devastan Vibhag.
Yes.
But that particular ITT ruling is not being accepted by the that charity commissioner. So how can we matlab, advise our clients, trust clients, that they should need not to worry, and later stage they will get the benefit of registration?
Till now, sir, I am very clear. If you have a registration under Society Registration Act 1860, it should be good enough. Because Devasthan Board, I am very well aware that Devasthan Board में registration पाना थोड़ा सा कठिन है फिलहाल at the moment. And I am not aware of any judicial pronouncements whereby by the higher authority, ITAT, as you very rightly said, there may be a pronouncement for it, but the higher courts have not yet pronounced on this.
Okay.
So that is creating a bit of a challenge.
Now, Anshul, you can continue with your further questions with Sir Ravi sir.
Yes, sir.
Anshul, you are asking one question, na? Ask that question.
अंशुल जी बोलिए.
Yes, sir. Sir, first of all, I would like to thank. I would like welcome our CCM CA Satish Gupta sir, Chairman CP Committee. Due to meeting, sir, connect with us now.
Some delay. Yeah.
And today I also got the opportunity of interacting with sir.
Thank you, Ravi bhai. Ravi bhai,
Yeah.
today actually our entire profession is suffering a lot in regards to audit concerns, and time is of only 13-14 days.
Yes.
So we have started the meeting with the Principal Chief Commissioner Rajasthan
Right, sir.
to give his recommendation to the CBDT for that extension.
Right.
I was there in the meeting, and I would just like to say, Anshul, to all our audience, all our viewers, all our my dear members, that have patience, and in this tough time, don't
Take your
leave
time,
the
sir.
quality, don't leave the quality, and institute is always with all of us within their legal parameters, and we are requesting our council and including our honorable president sir to have all the efforts to get some relief for our members who are in the process of doing tax audits and other audits in this month. And hopefully we will get some relief. But my message is very clear that we should not leave anything rather we should not compromise with the quality of the work.
Definitely, sir. Yes.
And what in my last practice of 40 years, I have not found much cases, 10-20 cases even, where the penalty of under section 271 capital B has been levied by the department. So don't worry, not leave the quality. Even if it is imposed, we all have there are plenty of the reasonable causes.
Yes.
If the portal is not working, it is also reasonable cause. If there are your system is not working, your audit assistants are ill, so there may be any good reasons which are really in existence, may work for all of us as a reasonable cause. So don't worry at all, but don't leave the quality.
Yes, sir.
And ICI is always with the profession. ICI is always with the members, and our president. I know our president, sir. He will not leave any stone unturned. That how can our members get benefited by under these circumstances? So don't worry at all. We are always with you. But I just wanted to give this message to all the viewers today. Thank you, Gagan Bhai, for coming and taking the session on GST, and
Sir,
thank
it has
you, Ravi
been my
Bhai.
privilege, sir.
Uh,
It's my privilege, sir.
Thank
Yes.
you, Gagan Bhai, and thank you, Ravi Bhai, for taking wonderful topic you have taken, and we would invite you again
Thank
for
you,
this
sir.
topic. And thank you, Ginni ji, हमारे बहुत proactive secretary of the
Yes,
committee हैं.
yes,
She is
yes.
working day and night,
Yes, sir.
having all odds for the benefit of profession and the members. She is doing very great. Ransul is our young leader from Ajmer, Rajasthan. So we know that he is also having so much capacity of leading to the profession. So we should come forward, brother. And thank you very much, sir. And if you want to convey anything, Ravi sir ka question जो भी बाकी हो, you can ask with him.
Yes. Yes.
And we are always with the profession. Don't worry, friends, and keep the quality working on. That's all. Thank you very much. Thanks a lot.
Thank you, sir.
Thanks, sir.
Thank you, sir. Thank you.
Thank
Satish Gupta, sir, always available for profession and always stand for any difficult times whenever facing by professions. Thank you. Thank you very much, sir. This time also required your
We all
guidance
are.
and
Not
support.
entire council is with you and my parent association. You are aware, Anshul and Gagan. Rajasthan Tax Consultant Association has taken decision
Yes,
today in the
yes.
meeting to file a
sir.
writ petition or the public interest litigation on the issue. So they have taken the decision. So we all are working. We have met with the Chief Commissioner, Principal Chief Commissioner today. So we all are with the profession. Our institute is with the profession. Our president, vice president, and entire council with the profession. So आप बिल्कुल भी चिंता ना करें. We are always with the profession and we will definitely leave no stone unturned for the betterment of profession. बाकी सरकार तो सरकार है, सरकार को तो उसके साथ चलना पड़ता है, हमको सरकार के नियमों का पालन करने के लिए हम बने हैं, परंतु फिर भी जो बेस्ट हो सकता है we will definitely do.
Thanks so much for the assurance, sir.
Thank you very much, Gagan bhai. Thanks a lot. अंशुल को क्वेश्चन पूछ लो सर से, रवि सर से.
Sir, no more questions.
अच्छा,
No.
सबको समझ में आ गया.
Yes, sir.
Thanks a lot. अभी टाइम
Thank
बाकी
you
है
so much,
5
sir.
मिनट का.
नहीं सर, थैंक्स स्पीच है सर हमारी. Sir, thank you, Ravi, sir. It is my previous thanks our second speaker, Ravi Gupta, sir, for the engaging and enlightful addressing, and your thought have added great value to today's sessions and give us new perspectives to reform upon. We truly appreciate the clarity and depth with which you share your knowledge. Thank you for inspiring, sir. Thank you very much.
Thank you so much.
Once again. And
Yes.
I would like also
Yes,
thank all the participation joining with us and remind you CP committee CP committee webinar. Please block your calendar Wednesday and Friday. Thank you.
CP committee would like to thank both the
Ginni madam,
faculties and
Ginni ma'am,
the moderator for today. Thank you
Ginni
so much.
madam. अरे गिन्नी मैडम,
Just a
are you
second.
listening me?
Just a second, sir. I'll just inform.
I just want to make a request all the viewers. If anybody is leading leader of the branch, so we are holding a meeting of the branch leaders on 19th of this month. So if you are listening me, to kindly attend that meeting, or so we can discuss several issues of profession. Ginni madam, you want to say anything to the viewers?
Yes, sir. I
आपको
thank
क्या-
you everybody for the session, for joining the same. And Satish ji also. We hope this session will continue in the future and it's been a success as more and more content members are joining and getting the information to proceed further.
Wow,
Thank you,
very
sir,
good.
for all your contribution every time.
Thanks a lot.
We hope
Thank
to
you.
have a further communications with you with respect to the future sessions.
Thank you,
sir.
ma'am. Thanks a lot. Thank you, Ravi ji. Thank you, Anshul
Thank you,
bhai.
sir.
Thank you, audience. Thank you, my
Thank
dear
you, sir.
members. And again, request, kindly don't leave the hands of quality. Always stick to the quality of the work. Thanks a lot. Thank you very much. Thanks.
Thank you.
Thank you, sir.
Hello.
Yes, yes, ma'am.
Now we will.
Hello.
Bhargav ji, we can end it now.
Yeah.